there's a couple of reasons why it's hard. Most people zoom in way too much. They're looking at 5-minute charts, or they're looking at a 1 day. Like, you see, watch social media when Bitcoin jumps 6 or 7% in a day up. It's like, oh, it's over, quick, buy before you miss out, rah, rah, rah. But no, Bitcoin fell from 69,000 and it's kissing 20 right now. 5% is nothing. 5% is not a change in trend. So when you're looking at the markets and you're seeing little price moves and volatility, you want to zoom right out. I look at a much longer time frame, and there's a good saying: if in doubt, zoom out. Right? Because if you zoom out and get some perspective, you'll see what's really happening beyond the noise. That's the first thing. People focus on too short a time frame. Second thing is that if you hold one thing, Bitcoin, Apple stock, Facebook, whatever, you hold one thing, that one thing means everything to your success right now. Right? And if that one thing means everything to your success, if that starts going against you, that's really going to hurt. It's really going to be stressful. But if instead you have a set of rules that allow you to trade a portfolio of things, cryptos, stocks, whatever, and they're all following the same rules, but they're getting in and out at different times because they all move a little bit differently, right? So let's say I have a system, and that system holds 20 different stocks or 20 different crypto tokens. It's like, if one of them goes against me, I don't care, because in that 20, something else will be doing well. And so the whole game becomes a game of numbers. If you have a set of rules that makes money, and I'll tell you how to confirm that it makes money in a second, but let's assume we have a set of rules that works. It doesn't work every time, because nothing works every time. But if you apply it many times in a diversified portfolio, then there'll be enough winners to offset the losers. And if you allow the winners to be big and you keep the losers small, you can make a lot of money. I mean, let's just do some simple math. Out of 10 trades, if you're wrong 70% of the time, 70%, 7 out of 10, you're wrong, and you lose $1. But when you're right, you make $5 on each trade. Those 7 losses are going to feel really hard, right? But you only lose $7. And then on the other 3 trades, you make 15. So overall, you make good money. So you've got to get past the idea that I need to be right. And this is where most people struggle, right? Because at school, what are we taught? You've got to be right. You've got to get the correct answer. But in investing, well, trading at least, active trading, that's not correct. You need to be able to be wrong. And I've been wrong way more than most people, which is why I can trade well, because out of thousands and thousands and thousands of trades that I've made over the last 20 years I've been doing this, on average, I'd say 60% of them have been losers. It's like, whoa, Adrian, you must be really dumb. No, actually, I have a high tolerance for losses, but I keep my losses really small, and I allow my winners to be really big, so that when the math works out, I make money overall.